buyers and homeowners are still worried about the housing and mortgage crisis despite a recent attempt to calm the markets with the Federal Reserve's interest rate cut. Meanwhile, the U.S. dollar is worth less than the Canadian dollar. So what does all this mean if you're looking to buy a new home? Joining us right now in our studio is Dani Babb, real estate expert and co-author of Finding Foreclosures. That's one way we know to get a deal, find foreclosures. We might get to that. But let's talk, Danielle, about what happened this week with regard to the dollar. Canada's dollar on par with the U.S. dollar for the first time in more than 20 years now. What's behind this?
What's behind this is some concerns over inflation, obviously. We also have cheaper goods coming out of lots of different countries that is decreasing prices here in the United States, and also different trade deficits and indicators we're seeing in those markets.
Okay, so how does the U.S. dollar's weakening position, how does that go about affecting the housing market in this country?
It actually will help with foreign investors bringing their money into our country. Yeah. We're seeing this a lot in New York City right now, where their housing market has actually sustained and improved over the past 6 to 12 months. So they are buying investments here as opposed to taking it to London and Russia where they were in the past.
That may be good short term. Mm-hmm. Is that good long term as well?
That's still up for grabs. We're not entirely certain how that's going to play out. This is the first time in history we've seen such an incredible investment in the housing market from foreign investors.
Okay. What about the Fed Reserve's somewhat surprise half-point rate cut? I mean, a quarter point was expected, half-point was certainly speculated on, and the idea was to help folks who had those adjustable rate mortgages keep their mortgages down. Mm-hmm. Is this move helping?
It's not helping people who already own homes and they're having difficulty making their mortgage payments. The reason being is that between now and 2009, the rates will still adjust between 1% and 4%, depending upon when they got in the market. Now, those that it is helping are individuals who are buying these foreclosures or buying homes on the resale market who are now able to get in with easing restrictions, although not lower interest rates. We have not seen rates drop much.
So this rate does effectively allow people to borrow, consumers to borrow money at cheaper rates. So does that mean then more consumer spending, which then helps fuel the economy?
Yeah, one area that we have seen a drop in interest rates in is HELOC. That's a home equity line of credit where people can basically take loans against the equity in their home. Mm-hmm. And that in historical times, especially in the last 5 years, we have seen that money be used for consumer spending. Especially people were using it as a piggy bank to buy cars and buy clothes and gifts and so forth. And that now should continue to pick up as those restrictions have eased and the rates have dropped in those areas.
And dropping, do you think the Fed's going to continue to cut the rates?
My belief is we will see another quarter point in December. I think it's really going to depend how the October fundamentals come out. If we can see inflation staved off by lower prices in these other markets coming from China, India, and so forth, then I think we will see another quarter point with inflation kept at bay.
How about housing prices nationally falling for the first time in decades?
Yes.
How long is that going to last?
Most of the people that I work with believe it's going to last 1 year to 3 years, with the average, of course, being around 18 months. And that's partly due to the incredible supply that's in the marketplace right now. It's going to take at least 12 months to clear up that inventory.
Okay, Dani Babb, thanks for coming and weighing in. Appreciate it.
Thank you.
He was best known for his silence. French mime Marcel Marceau has died at the age of